What a time to be alive. So we all know what happened today with the market and all the craziness that's ensuing. So today I'm gonna break down a little bit and try to give some understanding. So number one, I'm just gonna say this from the beginning. This is why I always preach when you're really investing, you should build a position, right? Like if you have $10,000, like back in March, you should have put a grand in, waited till April, put a grand in, waited till May to put a grand in, put a grand in. Now you've only been 4 grand in of your 10. And, even if it dropped, you give yourself an opportunity to reassess and see which way your picks are going and how it's all playing out. And you still have a lot of runway and a lot of capital left to still deploy. So, I'm not saying it's going to happen, but if it does go down another 20, 30% from here, you're going to be able to pick up stocks for even cheaper. And over the long term, that's obviously going to be more beneficial to you. Now, I didn't think that this was going to happen this quickly. Obviously, we knew a pullback was coming, right? Because we ripped up super quick, and nothing goes up forever. I mean, eventually, it was going to pull down. It was going to pull down rapidly, and that's kind of what happened. My projection was that it was going to go up steadily as we got more and more news opening up, and as more and more states open up. Like California on Friday, and or more portions of the economy open up, that we were going to get some bullish signs and it was going to go up. I didn't think it was going to rip up like it did. And then I thought in August, once we actually got real consumer reports, company reports, like, hey, how are these publicly traded companies doing in this environment? We would get a better guidance and a better outlook, and from there we would make a major move up or down with better information. And unfortunately, the market said, "Screw that, we're ripping up," and now it's like, "Oh no, we might close back down," and it's ripping back down. It just goes to show you that you got to think a little bit in the future. It is a futures market. So one of the things that I wanted to address was the owner of Barstool, kind of got destroyed for calling Buffett an idiot for pulling out of airlines. And a lot of people that have DM me and asked, they were like, "Oh, what do you think of airlines and cruises?" And I'm pretty sure I did a video on it before of why airlines probably aren't the best idea, why Buffett's pulling out. But I want to reiterate this fact, and this could go for every company going forward too. One note that I want to make is I think one of the things that were underestimated was the fact that Starbucks said they're going to lose $3 billion in revenue over the course of the rest of the year, and they actually shut down a large number of stores. And that was not, to me, encouraging news, but honestly, that was expected. That's what I thought was going to happen. Is some bigger businesses even were going to shrink, and especially people that had brick and mortar retail were going to shrink versus the online was probably still going to be fine. Now let's talk about airlines. So you got to understand. First things first is Buffett pulled out because of everything that he saw going on, right? Of the pandemic happening and everything. So why do you do that? Because he is chasing return on a dollar, right? So if I'm giving you a dollar, like I'm, giving a company, like, if you buy $30 worth of like an airline stock, you're giving them $30. You're expecting that airline to make so many dollars back. And I think before, don't quote me on this, but before it was like for every dollar that Buffett was giving airlines at the time he started investing, airlines were earning $7 per that dollar. So essentially, if you're buying like a $30 stock, you're earning $210 of earning power from that company. With that much money, there's going to be a potential in the future for a huge return. And airlines were started to become a great business because they consolidated and they started focusing on their each airline has its own little niche and own little area, and it started becoming profitable versus before everybody was just price gouging, and you had airlines going up and coming bankrupt, going up and coming bankrupt. It started to get neutral, but this thing killed everything. And one of the reasons why was, let's take away from the fact that we don't know what air demand is going to look like when we are fully open. We don't know. We have a probability that it's going to come back with a huge with a huge demand, in the sense of people are going to want a vacation, they're going to want to go see their family members. But is it going to get to where it was as far as air miles are concerned January 1 of 2020? Is it going to get to that level? And even if you were super bullish that, oh yeah, absolutely, no one's going to care, everyone's going to fly, then you got to take into the second half of what a lot of people I think missed is they didn't understand is when they got that government bailout, that's earnings that you got to pay back for that loan, right? They didn't just say, here's $50 billion to all the airlines or 100, whatever they gave, and said, okay, yeah, don't worry about it, don't pay us back ever. No, when airlines start earning, they have to pay the government back first. So that's number one. So therefore, the dollar you're paying today per earnings is lower. And the price was reflective but I still don't think it was reflected enough. And for Buffett at the time, that's what he was thinking too. There's too many negative things going towards it. That why would you take that bet? That's just like gambling. You're not in the business of gambling. You're in the business of allocating money to make money. So you got to wait and see, is this company going to be able to make money, and if it is, how much? And then depending on that, you're willing to pay a certain amount to earn that money back. And then the second loan part of it was these airlines went out, and good for them. They went out and they raised more capital, saying, hey, we're going to issue another, whatever billion, few billion, 3 billion, $10 billion in more stocks to have more cash on hand, so we don't need another government bailout. We'll be able to weather the storm. Well, that's great, but what you did is now you diluted the rights to earnings of all the other shareholders. So maybe, back in January 1 of 2020, for every dollar you were giving an airline, it was earning seven in earnings. Those earnings are going to go down because the demand is not going to be all the way there. And even that, even if it, let's say it goes down to like $5, that $5 is now also going to have to be paid back to these loans. And it's going to be divided up to more shareholders that came on board. So what are you really getting? Well, you don't know. You don't know. We don't know until things do open back up. Really, and to be all honest with you, I don't think that you're going to see 100% or above 100% booking, which airlines would do. I mean, we all saw those videos of, overbooked flights and people fighting and all that. It's probably not going to get back to that level until we get a vaccine. And even then, people are going to feel safe. And then you're going to have the demand come back. But then you still got to pay back the loans, and you got to divide up, those earnings with all these new stakeholders. So for you to think that airlines are gonna, like, for United, it's gonna go back up to like $90 highs. That's just not realistic. Now, over the course of time, will it? Heck yeah, it will. Why? Because things are naturally gonna get more expensive. The profits are naturally gonna go up because things are gonna get more expensive. But you're talking, quite frankly, you're gonna be talking like 7, 8 years down the road. Then you gotta ask yourself, well, is my capital best deployed waiting 7, 8, 10 years down the road in order to get that return and get that money going? Or am I better off investing in something else right now that's super depreciated and undervalued, or a little bit safer that I could get a higher return on? I mean, that's your job as a stock picker. That's your job to do your research, right? So that's why airlines were like that. And it was kind of the leisure industry overall, right? Like Norwegian Airlines and Norwegian Airlines, I mean, cruise ships and Carnival and all that, and even like Live Nation, they got hit the hardest, including casinos, because of the uncertainty that was there. Now that we know this, like I said, you got to just maintain your positions if you're locked in, and slowly start buying in. Even if you see this dip, you shouldn't blow your whole wad. You shouldn't just be like, oh, here's, I have $10,000 saved. This is the time to buy right now, because you don't know. You don't know what the future is going to be. Obviously, this is how business is, guys. Anyone that's ran a regular business, you'll know in regular business, man, you're going to have great years, you're going to have outstanding years, and you're going to have some pretty bad years, rough years, and things are going to get a little bit shaky. That's why a lot of people don't want to own businesses. So a lot of people just want to own a job. Like, hey, man, I'm coming here for 40 hours a week. You're going to pay me this paycheck. I want it steady. I want it consistent. And, and they like that life. They like that control. Some of the crazy guys that want to be entrepreneurs, they're like, well, I'm going to go, balls deep in this, and I'm going to, there's a potential for me to make 1 million, and maybe one year I'm only going to make like 200,000 because some crazy stuff happens, and there's stocks are going to be no different. It's literally a business that you could trade and buy into every single day, and every single day the business environment changes, right? So there's that, and to me, I feel that we did shoot up really quickly, but you also got to remember you got the Federal Reserve on your side. They're not going to let businesses fail. And the main reason they're not going to let businesses fail is because we need to have jobs for Americans to come back to. And that's another reason why Buffett didn't buy, because, if you listen to his shareholder meeting in its entirety, he said, I was waiting for phones to ring off the wire. And he said in the first, few days of that drop, they were. And all of a sudden, the phone stopped calling. And, because the government came. So why would, we cut a deal for equity if we could get a loan and protect shareholder equity, right? So that's the difference right now between that. And you got to remember, we're investing with few thousands. He's investing with few billions. He's not really worried about, owning like 5% or something. No, he's trying to go after a big fish. Like, something like Hertz, when it goes into bankruptcy and they can't pay back or whatever, he'd probably want to come in and buy that up for 2 billion and be like, okay, I'll take the whole shebang. I'll take the whole thing. He's not interested in owning something like 1% of a company or 2% of the company. So when people, you know, try to compare you trying to invest like Buffett, it's never going to work. We have to play our own game. It's just like when you play sports, any kind of sports, you're never going to be good at every single aspect of that sport, right? If you're a quarterback, you're going to be good at throwing. If you're a receiver, you're going to be good at catching. You got to figure out what your niche is, what industries you like, what you know inside and out, and then you got to stick. It's the core competence. You stick to it. That's the game you got to play. You can't be worried about what someone else is doing. You got to do your thing. And if your thing was airlines and you still believe in it, I hope to God that you took some of my advice if you were ever listening to this and you didn't just, go all in. And if you did go all in, if you did go all in at $10 on American and it shot up to what, like 16, 17, and now it shot back down, this might be a good time tomorrow to take, some profit and set some stop losses and then reassess your position overall. And that's one thing I'm scared of too. Is usually this goes usually one or two directions, right? It's not necessarily that's a pullback, but it's the fear. It's the fear that causes the selling, right? You're like, oh my God, if it went down, 5-6% today, what's stopping for it to go down 5-6% tomorrow? Then you go another 10% Monday, and then you get into this habit, and then you sell. So my only thing to you is if you went all in and you're still in the profit, I would be a little bit nervous. But if you've been building your position, I wouldn't sell. I would just say wait until Monday. Let's see how tomorrow shakes out, and let's see at the end of the day Monday shakes out. Then Tuesday, Wednesday, I'd keep a close eye if you've kept your 4 week time frame, and then I would look to buy and see which direction it's going. And in all honesty, guys, we cannot resort back to closing the economy again. We just can't do it. I understand that there's a huge health concern and health issues and stuff like that, but there's gonna have to be some risk that we're willing to take to try to get back to some type of normal, because we cannot go on forever just locked up in our homes in the fear that we're going to lose our life, because at the end of the day we are going to end up losing our lives because someone still got to go out there and make stuff. Someone still got to go out there and make the food that we purchase, and we still got to be able to do the jobs that we do in order to purchase that food. It's not even about money or economics. It's just we just need to keep trade going, because if the virus doesn't kill us, then god dang, then this is going to kill us. Starvation is going to kill us, and lawlessness is going to kill us, because you probably will have people fighting for food. And if you don't believe me, just Google Venezuela. Google Venezuela's, outside of the hyper inflation, just take that out, but think about the people not being able to produce and goods not being on the shelf, and see what that does to a society, see what that does to a psyche of people. It's just as bad as you dying. I don't know. I mean, I don't have kids yet, but I couldn't imagine looking my kids in the face and saying, I don't have enough money to feed, my family. That can't happen. So I think we have to move with caution. I think things are still going to proceed forward, and I think that this is going to be the time that we're going to look back on history with everything going on. We're going to look back on history and we're going to say this was the most innovative time for medical advances. I think when this thing is all said and done, we are going to have one of the greatest tech booms for medications. And it's going to be a rough ride. It's not going to be easy getting back on top of, because this hit us at a time where the markets were already kind of high and things were already kind of out of whack. So this just amplified everything. It already pushed the companies that were supposed to go bankrupt. That wasn't a shocker to anybody. And it's probably going to push a lot more to go bankrupt. But the companies that are good, the companies that are solid, the companies that are going to emerge out of this are going to emerge out stronger with a better core. And honestly, we're probably going to emerge back as a more efficient America, because capitalism is going to do its job. It's going to be able to facilitate the time, your time and hours worked for companies that are doing the most benefit right now, right? So I'm still very bullish on America overall. If you lost money today, hey, I lost too, so don't worry. I'm in a position, but I invested heavily into a company I believe in long term, and even if it goes down 50%, what am I going to do, bro? I'm just going to have to hold and just, I'm going to be on the same boat as everybody else, but that's investing. Remember this tip, man. The markets take money from the impatient and they reward the patient. But with that, good luck in your next trade. Good luck in this crazy market. I know I only got to address the market and not the housing market, which is crazy, which is still booming, 13% increase, which I don't understand, but that's a whole nother discussion. But I just want to put this out there today to have you guys hopefully watch this sometime tomorrow and just, maybe get some type of a perspective, and hopefully you learn something watching this. So, hey, if you could do me one favor, just share this with one person. I'm trying to get to 500 followers. That would be amazing. All right, guys.